If you're thinking about buying a home, whether it's within the next 30 days, the next 6 months or year, one of the things that you definitely want to do is make sure you take care of your credit. There's a few things as a loan officer that we're going to look into for you that's going to help you through the loan process and help you become a homeowner. If you're brand new to the process, I can certainly walk you through that. As a loan officer, we're going to look in a few different areas of your financial profile, and one of them is your credit score. Definitely want to have a good credit score. What does that mean? Generally, you're going to have a credit score given to you by 3 credit bureaus. Sometimes you'll have 3 credit scores, sometimes you'll have 2, sometimes you'll have 1, just depending on really how much credit that you've established. Your credit profile really tells us a lot about you. Am I a responsible person? Am I able to make my payment on time? And the reason that is so important to a lender is because we're going to want to know when you go to make your house payment, you're going to go ahead and make it on time. That's a really, really important part of the home loan when we check to see what you can qualify for. So that's one of the things that you want to prepare for as a potential home buyer, is to make sure your credit is in order. A good credit score, I would say, is 680 on up. The higher the credit score, the better. The credit score not only matters whether it's purchasing a house, but it also affects other areas of your life. Let's say if you were to get an auto loan, it would affect the interest rate on that also. And I don't know, maybe your employer is going to check your credit from time to time, or maybe your potential employer is going to check your credit. Your overall financial ability to repay your debt is very important, not just for home ownership, but just for your life and credit in general. That's the very first item we're going to check and we're going to want to know about. Now, having said that, just because you might have a credit score lower than 680 doesn't mean you're a bad person or you don't have good habits. Things happen, right? You have a late payment, you get sick, maybe you got laid off your job for a month or 2 and you're just not able to make the payment. So life happens and we understand that. And because of those reasons, there are programs that are available that we can still lend you money and make the home loan work. But overall, the objective should be to have the best credit score available. That would be the very first section that we're going to take a look at. And the next section is your employment. You don't necessarily have to have a job to get a home loan. If you have Social Security that you're going to be receiving, if you have pension, you have dividends and interest, there are other types of income that you can have in order to get a home loan, but the majority of clients are going to fall into 2 buckets. One is some people are self-employed, the others are wage earners, so they work for somebody, and you're going to normally get a pay stub and a W-2. Along with the credit, remember, making your payments on time, we want to make sure that you're strong enough and have sufficient amount of income in order to make that home loan payment and support that payment on a consistent basis. One of the things that we look at outside of the credit is your type of employment, how long you've been employed, are there any gaps in employment? The general ruling for lending is that we want you to be in the same line of work for a consistent consecutive 2-year period. Sometimes you're going to change jobs because you want to move up. Sometimes you're going to relocate. There are other things that can happen, can fall into that category. We know how to look at that and make it make sense. One of the other items is, let's say you just finished college in the degree of engineering and you have an offer letter as a salaried employee for a company and you're going to start in the next 30 days. Your schooling education counts as part of that employment. We get a copy of your degree and we get a copy of the offer letter, and as long as the 2 match and marry, then we can make that work also. There's a few variables there. That is a great loan officer, I know how to put that together for you. If you are self-employed, the general ruling also is that you have at least filed 2 years of your federal tax returns as a self-employed person. Sometimes people are a little bit less. There are programs that we can make happen if, let's say, you've only been employed for 1 year, but the preference is really that you have 2 years of federal taxes filed as a self-employed person. So that matters if you are a sole proprietor, a corporation, S corporation, or a partnership. And lastly, putting together the credit, the employment, we're going to look at your assets. Now, when we talk about assets, we're talking about what kind of funds you have available in your checking, savings, money market, brokerage account. Have you been able to save money? What has been your ability to save for a down payment and for closing costs? The more money that you have available, not necessarily that because we want to use it all, the better it is. You want to have some money saved, checking, savings. Some people have a 401k they can pull from, but if you don't have the money, there are some down payment assistance programs that are available for you that we can put together. Sometimes you have to be a first-time home buyer, sometimes not, but it's preferable that you've taken the time to budget your income and set aside some money for the down payment and closing costs. You can also get a gift from a family member. You can't necessarily borrow it off a credit card. That's the general ruling. But again, these are just generalities to give you an idea. Those are the three main buckets that we're going to look at when we think about considering you for a home loan. To recap, we're going to look at your credit profile, credit score. We're going to look at your income and employment. And lastly, your assets, your checking and savings. Those are the three buckets, the basic part of what we're going to look at for purchasing a home loan. Those are some great tips for you.